Welcome, mention, and other fine folks to the Sunday dispatch of the Black Letter, where we contemplate thoughts worth thinking. This is your spectator of the spectacle coming to you live from deep inside the upside down. Okay, we've got a bunch of things to talk about today. We're going to spend some time on precious metals, on stocks and the economy generally, as well as ask the all-important Magic 8 Ball a question, as well as a little bit of cryptocurrency, and we'll look at the markets as well. So first off, the potential looming catalyst for silver no one sees coming. Now this is all speculation. I don't necessarily and I don't necessarily agree with all of it, but it's interesting nonetheless. So give us some headline making inflation, for example, and a roaring bonfire in the silver market will be underway. Of course, that's certainly going to come. But this article is about the potential of governments coming in to buy silver as part of their strategic assets as they're purchasing gold. As you know, many governments around the world, especially Chinese, I think Russians, Americans to some extent, are buying gold hand over fist. So yes, it's true that central banks don't hold silver in their reserves today, but why would they add silver to their reserves or begin to stockpile it again? There are actually many reasons, and he introduces 5 of them. History. Silver has been actual currency throughout history more often than gold. He goes on to say that India was a silver country long before it was a gold country. Mexico is the largest silver producing country in the world. They could use it to store up their reserves, etc., etc. China and Russia also are big producers. A monetary crisis demands it. Silver is already an alternative to any monetary breakdown. As we know, gold and silver have been used as money and currency for millennia. It's already money. Silver, like gold, has no counterparty risk. It's no one's liability. Silver is also an internationally recognized, globally accepted, and highly liquid. Silver is cheap relative to gold. As silver bugs know, silver is dirt cheap. It requires more storage space, but that's not a strong enough reason to avoid it. Its low price has made the market so small that even just one country starting to buy would send investors worldwide scrambling to get their hands on some of it. And nothing is impossible today. So it's an interesting idea. I personally don't see governments really going into storing silver in their vaults like there are gold, maybe a little bit. In fact, you can see the government silver inventories here. They've been decreasing since 1970. And the reason we usually go back to 1970, as most of you will know, is that we had the gold standard until 1971, in which case there wasn't the same volatility in the price charts for gold and silver back then. And here it goes on to fill that pipe with some hopium. If governments wanted to match prior levels, the current level that governments have apparently is 46.8, I think that's million ounces. And this is how much they would need if they wanted to match the 1975 level, 80 level, and 1970 level, for example. So there's a lot that they would need. And the number of ounces needed to match per capita. Anyway, it's an interesting article. I'll leave it in the discussion below. Of course, one of the things that helps silver, unlike gold, is that 15 to 20% is lost each year through industrial use. Because it's used in such small quantities that it's not worthwhile and not easy to recycle it. Anyway, there you have it. Governments potentially could own silver, but I think what will really drive silver will be when the situation gets quite dire. We start seeing inflation, or perhaps this economy, this depression that we're in, starts to take its sweet time in evolving over the next year, 18 months. And folks who can't afford gold start to realize that, the value of their dollar or their currency is no longer keeping up with what they need, and they'll flock to silver. World's ultra wealthy go for gold amid stimulus bonanza. Now some are channeling up to 10% of their clients' portfolios into the yellow metal as the massive central bank stimulus reduces bond yields. And this is what I'm talking about. All this Fed stimulus or the Treasury stimulus and checks is just creating very narrow markets where you can legitimately bank or invest in things that have potential long-term value down the road. As mentioned, bond yields are extravagantly low. So much so, in fact, that you could argue that bonds are in an asset bubble right now. Gold and silver are precious metals that are relatively undervalued, still have some potential to move up. Gold certainly, silver perhaps more so once it gets caught up, because as we've told you, as we've mentioned many times, the gold-silver ratio is at practically all-time highs. Stocks are in an asset bubble, real estate's in an asset bubble, so where else do you go? Many private bankers bet that gold has further to run, and I agree with that, but not as much potential to run as silver, in my opinion. 9 private banks spoken to by Reuters, which collectively oversee around 6 trillion in assets for the world's ultra-rich, so they advise clients to increase their allocation of gold, and I read somewhere here to about 10%, I think, is what they're recommending. Yeah, channeling up to 10% of their clients' portfolios into the yellow metal. So that's quite interesting. Leave this article down below too. Of course, the ultra-rich can afford gold. The hoi polloi, like you and me, have to go for the gentleman's precious metal, silver. All right, onto the stock market. Stock market could be on the verge of a lost decade, Ray Dalio's Bridgewater warns. Ray Dalio's Bridgewater Associates said in a note Tuesday that the stock market would be on the verge of a lost decade for investors. A lost decade for stocks would reverse a years-long trend of strong growth for corporate earnings as globalization has already peaked. So it's very interesting, as you'll see. The stock market could be on the verge of a lost decade, Ray Dalio's Bridgewater warns. Ray Dalio's Bridgewater Associates said in a note on Tuesday that the stock market could be on the verge of a lost decade for investors. A lost decade for stocks would reverse a years-long trend of strong growth for corporate earnings as globalization has already peaked, Bridgewater said. The firm said the COVID-19 pandemic would harm companies left with lower levels of profits and cash flow shortfalls. Companies are likely to come out on the other side of the coronavirus more indebted, he said, no doubt. So this is a guy that's worth listening to. He's a good macro specialist. He understands the sort of global perspective, the 30,000 feet level, and I think he has a lot of interesting insights. And he talks about this great 80 to 100 year sort of credit cycle we're in, and we're sort of in at the top, coming down from the credit cycle, which is going to create huge problems for us in the future. And I happen to agree with him, but yet the markets don't seem to understand what's going on. If zombie companies don't die, we'll pay a price, each peak lower than the last. So we're having lower highs and lower lows, right? We know what that means. Can't go any lower than this, though they might go down to negative interest rates. Well, they'll only do that if they can move to a digital currency, I think, but who knows. But there's a growing worry in some quarters that all of this lending will create a wave of zombie companies. Zombies are businesses that have to borrow to survive and don't make enough profit to cover debt service costs. The reason presumably is low interest rates, which allow zombies to sustain themselves on borrowed money rather than exit the market. Zombies are a problem for 2 related reasons. First, they tend to be less productive. Zombies tend to consume scarce resources, personnel, office buildings, and capital, and thus leave less for healthy companies. Another research team found in 2018 that in countries with more zombies, the healthy companies grew more slowly. In a healthy economy, bad companies die and good companies replace them, and new industries rise while old ones fade. But if the Fed keeps all of the bad companies on life support, neither of those necessary processes can happen. It's like a garden, really. You have to prune the dead branches and the dead shrubs, and that you have to sometimes haul them out, take them out to allow for new growth, right? But that's not happening because the gardener, the Fed in this case, just won't allow it. Standard economic theory holds that if the Fed keeps monetary policy too easy for too long, inflation will result. I think that's exactly what's going to happen. A dangerous gap has opened up for US equities, and we'll show you what this is. For example, the combined market capitalization of just Apple and Microsoft is now larger than that of the entire German stock market, which is appalling. Just goes to show you another reason why things are so out of touch with reality. This is Apple and Microsoft combined market cap, and this is the German market cap. Try to understand why US equities have been relatively attractive to overseas equities for so long. Well, one reason is simply that US assets have consistently offered higher rates of return than similar overseas assets. And here he's talking about the 10-year treasury yield as compared to the 10-year bond yield, which is the German 10-year bond, right? So the treasury yield, even up until recently, still just about, 0.75%. And here we have, negative, probably negative 5%. So that's one reason. Relative performance of US stocks versus the rest of the world over the 10-year period prior to 2020 has been a very high 94%. But while spreads between US and German yields have narrowed dramatically over the past year, US stocks have dramatically increased their outperformance of their overseas counterparts at the same time. And here we can see this as the SPX versus the world has been doing well. And the 10-year treasury yield less the 10-year bond yield has created a huge gap, and you can see how they're very well correlated for the past decade up until 2019, late 2018, right? So this doesn't seem to suggest good things in the future, I would argue. Is this divergence sustainable, or are US stocks due to give back a good deal of their significant outperformance now that US assets are no longer a relative bargain? And he suggests that that would be the latter, that they'll be underperforming to the downside. Anyway, more thoughts to think about. Almost 46 million Americans have now filed for unemployment claims since lockdown began, right? See, it's almost, unless there's a big drop off next week, they're all above 1 million. These ones are kind of flatlining. So could this be a slow tapering down? We'll see 1 million for another, month or so, greater than 1 million. Who knows? But it makes all these other things look inconsequential. Continuing claims did drop very modestly, but hardly a signal that reopening is occurring, and definitely not confirming the payrolls data, right? So we still have over 20 million ongoing claims, I believe, here. There's a weekly change in initial claims by state. It's interesting. Here's the payroll jobs created since 2010. We've wiped them out more than double in the last 13 weeks, right? And finally, it is notable we have lost 388 jobs for every confirmed US death from COVID-19. Was it worth it? Yes, it was worth it. Why people just don't understand the value of life is astonishing to me. Mind you, this is, I believe, a right-wing blog website, apparently, so I've heard. I like some of their articles. They do seem to investigate the things and to bring to the fore, under the light, things that, banksters and other government gangsters would sooner have swept under the rug. But nevertheless, yeah, it is always worthwhile to save one life, regardless of the cost, to a large degree. I mean, you can always rebuild companies, you can always make more money. You can't make another person the same. We can't clone them yet, and neither would we want to, right? Anyway, I'll get off of that little point. Dysfunctional financial system is unleashing a dangerous environment for investors, long-time bear David Tice warns. I find the biggest disconnect that we've ever seen in my 35-year history of matching Wall Street between fundamentals of the economy and the stock market. So he's a bear, and he's also been wrong many times. He had similar forecasts in 2012, 14, but that never happened. So who knows? I mean, he's speaking his book, right? His job requires him making money on the downside. And of course, it's very difficult to make money on the downside now with the Fed, doing what they're doing. On to cryptocurrency, why Bitcoin is valuable, debunking the greater fool theory. This is a terrific article. I recommend you read the whole thing. We'll spend some time going through it because this is one of the best cases I've heard or I've read about why Bitcoin has value. It goes on to talk about, the obvious early questions that people have about custody, volatility, and regulatory standards. Those are easy to mitigate those concerns. For example, it talks about here, but then goes on to the deeper question of why does Bitcoin have any value at all? And he starts to talk about the early asset of oil, right? And talks about the lesson from the history of crude oil. So prior to the late 1800s, crude oil was mostly a nuisance. Pioneers in the American West who dug wells searching for water would sometimes find oil and be disappointed. The problem was that oil had no identified utility. It also stank. Finding oil was about as interesting as finding mud. Things started to change when George Bissell had a breakthrough in the 1850s. He wondered whether rock oil, as it was called, could be processed and be used as an illuminant, replacing coal oil for kerosene lamps and as a lubricant for machines. That's how the oil industry was born. For the first few years, however, demand remained low as oil prices had issues. One was that it stunk, as I mentioned, as crude oil has a naturally high sulfur content, but subsequent chemical refinements like desulfurization, funded interestingly by oil producers like Standard Oil, created new uses and markets. The turn of the century saw engineers experimenting with internal combustion engines, and by the end of the 1920s, 85% of oil production was used towards fuels. Very few saw the potential of the new light early on, but those who did, like John Rockefeller, were responsible for some of the largest examples of value creation to this day. Bitcoin is analogous to oil after the development of the kerosene lamp, but before cars, planes, and the rest. It is a commodity with certain limited but meaningful real-world uses. Individuals use it today to store savings outside of the fiat currency system, like as digital gold, as I mentioned before, to move money across borders, and to settle large transactions quickly and in an irreversible fashion. In certain countries, it provides a release valve for citizens concerned about oppressive regimes and a way to expatriate money with limited physical risks. These applications are just scratching the surface of Bitcoin's potential, however. Its real value lies in allowing money to move at internet speeds and allowing it to be held in an autonomous fashion. Investors buying Bitcoin today are betting that the future use cases built upon these core capabilities will be larger than the current market cap of Bitcoin. So, for example, if 10% of the wealth currently stored in physical gold comes to be stored in Bitcoin in the future, each Bitcoin would be worth around $50,000. And that's just, as a value storage. It doesn't talk about the use cases that might increase the value of Bitcoin even further. Now, here's where the analogy with oil breaks down, as he mentions here. There are two things that are true about Bitcoin that are not true about oil: the supply. There will only ever be 21 million Bitcoins. Demand could surge 100 times and supply wouldn't budge. And storage. One can hold Bitcoin for years at a low cost, waiting for demand to arrive. Buying Bitcoin today is like buying oil in 1850 after seeing its early utility. And unlike oil, with Bitcoin, you're in no rush. Great article, folks. I encourage you to read the whole thing. It goes on to, just goes to show you that this is the early days, the early adopter phase, really, of cryptocurrencies and Bitcoin especially. And if you're interested in them, I would say just, maybe start with Bitcoin, buy $10, $20 worth and see how you like it. Get comfortable with holding it in a wallet on your phone or that kind of thing. And now let's look at the markets here, because this I thought was interesting. I'm going to show you a couple things. So where would you rather have money? And I know where I would. Would I rather be investing in something like this? This is the SPX, which is the SPY, right? The S&P 500, excuse me, at an all-time high in arguably the worst economic depression that we will probably see in over 100 years, worse than the Great Depression. And here we are in the midst of it, and we're at an all-time high. You can have a look at the NASDAQ. It'll be even worse. You can see the NASDAQ is also at all-time high. The same with the Dow Jones. Look at that, also practically at all-time highs. Is that where you would want to invest money? What is the potential there, do you think? I mean, just looking at a chart like that looks pretty parabolic. We can do log even still, and you can see it's an all-time highs. So would you rather invest in something like that or something like Bitcoin? Here's Bitcoin, as you can see, which is about half of where it reached its all-time high. So here's Bitcoin about at its all-time high. It's about half of its all-time high. This only goes up to some reason here at about 15,000, but it hit 18 or so, I believe, or almost 20,000 at its high. This is probably maybe a monthly chart. I'm not sure. But would you rather see something like that, where it's maybe fairly valued? Let's have a look at silver. Here you can see silver is at relative low prices compared to its all-time high of about 50 bucks an ounce. Now it's at about 17, so it's well over half. Technicals are suggesting a buy, but you know, I wouldn't listen to those. And let's have a look at gold. You can see gold is practically at an all-time high here. So in my mind, you know, silver and the cryptocurrencies currently seem to be arguably some of the best places to put money. At least that's what I think, just looking at the charts. Now, of course, you have to do more diligence than that, just looking at charts, but arguably it's easier to make money if you're buying gold down around here than if you're buying at an all-time high. Not to say impossible, of course, but I think gold has some potential still. Let's look at Ripple. It's another cryptocurrency. I mean, look at that, right? It's at a very, very low cost relative to how high it's been. So Bitcoin, not as good. Obviously, Bitcoin is the granddaddy. You're still getting at about half the cost of its all-time high. Ripple is way low, practically at an all-time low here. And another one I like is Ethereum. And here also at a relatively low price considering its all-time high. Anyway, just some of the things. Yeah, the technicals are saying sell. Who knows why that is? Anyway, these are some of the thoughts that I think about when I'm looking at investing in or investing in anything, and where to put my money and which different asset classes might have the greatest potential moving forward. Now, on top of the stock market being at all-time highs, I'm very concerned about the Fed's intervention and the lack of free market capitalism, certainly. All right, folks, let's get on to the Magic 8 Ball, see what that has to say today. So the question I have today for the Magic 8 Ball is silver a good investment right now? Let's see what it says. Most likely. There you are, folks. The Magic 8 Ball has given me what I was hoping for, not like the last couple of days when it's been in the upside down like all of us. Anyway, thanks for joining me. I hope you found this discussion interesting. I'm always curious about your thoughts. Please share them down below. And remember, dum spiro, spero.